a near-perfect credit score. It's a goal that might seem out of reach, a financial Everest, but let me tell you, it's an achievable dream. And it's a journey worth taking because a stellar credit score is more than just a number. It's a passport to financial freedom and peace of mind. Think of it as your financial report card. It tells lenders, landlords, even potential employers about your financial habits. A high score whispers responsibility, trustworthiness, and smart money management. It opens doors to lower interest rates, better loan terms, and greater financial opportunities. This journey is about taking control of your financial future. It's about building a strong foundation for a brighter tomorrow. Are you ready to unlock the secrets? Let's dive in. Imagine this. You're ready to buy your dream home. You approach a lender and they're impressed by your credit score. You secure a lower interest rate, saving you thousands of dollars over the life of your loan. That's the power of a high credit score in action. A good credit score doesn't just make home ownership more affordable. It unlocks a world of benefits. Want a new car? You'll qualify for lower interest rates on auto loans. Need a credit card with better rewards. A high credit score makes you a prime candidate, but the benefits go beyond material possessions. A strong credit score can even lead to lower insurance premiums and better rental opportunities. It's a testament to your financial responsibility and opens doors to a brighter future. Now let's demystify the world of credit scores. 5 key factors influence that all-important number. Understanding them is the first step to improving your score. First and foremost, payment history. This is crucial. Paying your bills on time every time shows lenders you're reliable. Next, we have credit utilization. It's the amount of credit you're using compared to your total credit limit. Keeping this ratio low is key. Then there's the age of your credit history. The longer you've been responsibly managing credit, the better. Having a mix of credit types like credit cards and loans also helps. Finally, be mindful of hard inquiries which occur when you apply for new credit. Too many inquiries can ding your score. Remember, payment history reigns supreme. Late payments can significantly damage your credit score. But fear not, there are simple strategies to stay on top of your bills. Set up automatic payments. This ensures your bills are paid on time, even if you forget. Mark due dates on your calendar or set up reminders on your phone. Life gets busy, but these reminders will keep you on track. If you're struggling to make ends meet, don't suffer in silence. Reach out to your creditors. Explain your situation. They may offer temporary hardship programs or revised payment plans. Remember, communication is key. Section 5. The Credit Utilization Balancing Act. Credit utilization might sound complex, but it's simple. It's the amount of credit you're using compared to your total available credit. The lower this ratio, the better. Aim for 30% or less. Let's say you have a credit card with a $10,000 limit. If you have a $3,000 balance, your credit utilization is 30%. Keep your balances low by paying down your debts strategically. Focus on the card with the highest interest rate first while making minimum payments on others. Consider requesting a credit limit increase on your existing cards. This can lower your credit utilization ratio, but remember, only do this if you can manage your spending responsibly. The goal is to use credit wisely, not accumulate unnecessary debt. Section 6. Time your ally in building credit history. Building a positive credit history takes time. There's no overnight solution. Patience and consistent responsible behavior are your allies in this journey. The length of your credit history demonstrates your experience managing credit. Lenders view a longer history favorably, as it provides more data points on your financial habit. If you're new to credit, start small and build gradually. Consider a secured credit card or a credit builder loan. These options allow you to establish credit while minimizing risk. Remember, building a strong credit history is a marathon, not a sprint. Consistency is key. Section 7. Diversifying your credit portfolio. Having different types of credit, like credit cards and installment loans, can demonstrate to lenders your ability to manage various forms of debt responsibly. Think of it like a diversified investment portfolio. Just as you wouldn't put all your eggs in one basket, you shouldn't rely on just one type of credit. A healthy mix might include a credit card for everyday purchases, a car loan, or a mortgage. However, avoid opening too many new accounts at once. Remember, each application can result in a hard inquiry, potentially impacting your score. Focus on building a responsible credit history with a few well-managed accounts. Section 8, Authorized User, a stepping stone to credit building. Becoming an authorized user on a responsible family member's or friend's credit card can be a smart way to build or improve your credit. As an authorized user, you benefit from the primary cardholder's positive credit history. Make sure the account you're added to has a good payment history and low credit utilization. Inquire about the credit card issuer's policy on reporting authorized users to the credit bureaus. Not all issuers report authorized user activity, which could limit the benefits. Being an authorized user can be a stepping stone, but it's not a substitute for building your own credit. Use this opportunity to learn about responsible credit management and eventually apply for your own credit card. Section 9. Harnessing the power of Experian Boost. In today's digital age, innovative tools like Experian Boost can provide an extra boost to your credit score. This free service allows you to include positive payment history for recurring bills that are not traditionally reported to credit bureaus. By connecting your bank account or credit card, Experian Boost identifies payments for utilities, streaming services, and even rent. These on-time payments are then factored into your Experian credit report, potentially giving your score a positive lift. While Experian Boost won't magically erase negative marks, it offers a valuable opportunity to showcase your responsible financial habits. It's a testament to the evolving landscape of credit reporting and the increasing ways to demonstrate your credit worthiness. The Section 10. Vigilance is key guarding your credit report. Your credit report is a living document reflecting your financial history. It's crucial to regularly review it for accuracy and address any errors promptly. You're entitled to a free credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every 12 months through annualcreditreport.com. Scrutinize each report for inaccuracies such as incorrect personal information or accounts you don't recognize. If you spot an error, dispute it immediately with the respective credit bureau. Provide supporting documentation such as account statements or payment confirmations. Remember, you have the right to a fair and accurate credit report. Section 11. Embrace the enduring value of excellent credit. Achieving a near-perfect credit score is a journey, not a destination. It requires discipline, patience, and a commitment to responsible financial habits. But the rewards are immeasurable. A strong credit score empowers you to achieve your financial goals, from securing a lower mortgage rate to qualifying for better credit card rewards. It provides peace of mind knowing you have a solid financial foundation. As you embark on this journey, remember, every step you take towards improving your credit score is a step towards a brighter financial future. Embrace the process, stay informed, and celebrate your progress along the way.